Suneeta Reddy, Managing Director, joins us. Hi, Suneeta. Good to be speaking with you. Well, the numbers overall were good, but the point of concern was ARPOB because that just grew 2.3% or 2 to 3%. What was the reason for that, and when do you expect double-digit growth to come back?
No, I think the main thing about this is that if you consider the volumes grew by 11% and the rest was case mix. So you will see an improvement probably in the next quarter. But also we had a lot of medical discharges this quarter. So there was only a 2% increase in our POB.
Okay, so there was a mix change, but any pricing issue that you saw in the quarter?
Nothing to do with pricing. In fact, I think in the next quarter you'll see an impact where the pricing is really there's a 5% positive impact that will come from price.
All right, now I wanted to get in a perspective, Ms. Reddy, as to what the outlook is within the healthcare service, because you had given an guidance of an increase in your margins for FY25 by 150 basis points. There has been improvement in your margins, but still I think it's about 90 basis points away from the target. When can you achieve the growth or level that you set out to?
Well, hopefully, in the next 4 to 5 quarters, we'll see this because, definitely we are working on cost and there is some reduction coming in that you will pay out by the end of the year.
And your overall occupancy as well has shown pretty strong growth. But in the western region, it's a little bit lower than the overall occupancy, standing at 55%. Is Nasik still a big drag? And what's going to be the roadmap or the game plan to improve your occupancy here and outlook overall?
Well, I think the important thing is to note that Navi Mumbai is doing very well. They're at an occupancy of 68%, and that Ahmedabad is slightly muted, and let me say, there is a lot of competition in Ahmedabad. Nasik, we have, our intention there was to take healthcare to Tier 3. It becomes a referral into Navi Mumbai, and as a referral center, it does very well. And it is, it does a bit of more than a bit of break even. It does contribute 2 crores to EBITDA. So it serves its purpose.
Okay, serves the purpose. That's the word coming in. The GMV for Apollo 24/7 was up around 9%. What's the outlook from here on? What kind of gross merchandise value should we expect as we progress into the second half of the year?
I think, we have shown that 695, we're at 695 crores, but we are looking at a target of improving 1,000 crores per quarter, and that will happen, over the next 6 quarters.
Okay, and the margins in the AHLL were affected in FY24 due to the introduction of numerous specialty care centers. Now, this quarter, they've actually further fallen to around 8.5%. Why does it continue to fall despite, no major increase this quarter in terms of the spends? When is it expected to improve?
Well, I think they opened 2 new centers, and the cost of that has brought down the margin. Both Cradle and Spectra formats, they added new formats, so new centers, and with that, the EBITDA came down. But on the diagnostics, the margin has moved up to 15%. So I think there is a healthy trajectory.
So, till when do you expect them to go above 10%?
They're slowly improving. They're also, we must remember that it's a company that's growing. So they're adding new formats of care. They've added this Cradle and Spectra. So the revenue is building up. And I think that with the diagnostics being very profitable, on the whole, AHLL will move towards profitability by the end of the year.
And the company also expects a 20% revenue growth in AHLL, but the growth this quarter has been 15%. So, do you think that we can expect you to better your growth, or will you be lowering your guidance?
No, you should expect more growth because this quarter, because of elections and really the heat wave, it was, in a way, it was muted. So you should expect much better performance next quarter.
Okay, ma'am, that point is taken. And also, finally, before we let you go, is there any change in the payer mix? And if you can perhaps leave us with a bit of an outlook on that one.
Yes, there is a slight change in our payer mix. So we have insurance at 42%, which has really grown, and I think that, but grown very profitably, and that is really been good for the company on the whole.
All right, thank you so much, Ms. Reddy, for joining in. That's the word coming in from the management of Apollo Hospitals, and they are seeing no pressure in ARPOB as of now, eyeing a 70% occupancy in FY25, and that they are looking at a positive impact of about 5% when it comes to pricing in the next quarter. So that's the take coming in from Apollo Hospitals.
If you like this video, then like, share and subscribe to ET Now.